education to try to get out there and say, hey, before companies come in and just bid up the price to, multiple six figures, try to learn about it and buy some. Um, so I think people can keep doing their part for education. Um, and everyone has their kind of like, there's different things you can do. Like you can educate, you can invest in companies that make it easier to self custody, um, all sorts of things you can do. But basically, everything I'm seeing now is still good for Bitcoin. And I'm bullish because it continues to work.
Hey guys, welcome to Everyday Finance. There is a bigger, less noticeable change happening in the financial world that is changing the future. This change is happening in the middle of all the noise about Bitcoin's price changes, exchange-traded funds, ETFs, and new rules. Small investors are focusing on volatility and meme coins at the same time that large institutions like sovereign wealth funds, corporations, and experienced macro strategists are getting ready for a long-term shift in the way things are done. One of the most well-known examples is MicroStrategy, which has become a Bitcoin powerhouse worth $84 billion under the leadership of Michael Saylor. Wall Street was skeptical of this accomplishment, but it shows that businesses are changing how they think about Bitcoin. It's not about making quick money. Instead, it's about making Bitcoin's decentralized system stronger and more reliable. Macro strategist Lyn Alden is one of the people who are thought leaders who say this is the start of a much bigger movement. Bitcoin keeps working without any problems, showing that it can be relied on and paving the way for widespread use. In contrast, traditional systems often break down when they are under a lot of stress. It shouldn't be a surprise that Bitcoin has moved beyond speculation and is now becoming the basis for a new way of doing business around the world. Take a deep breath, because this is just the start.
I'm bullish because Bitcoin works, which people I think often forget or take for granted. So, for example, one of my banks is a Big Four bank that I use for international wire transfers and business banking and all that kind of boring stuff. And like all day today, they've had wires offline because of some technical vendor issue. So just can't send wires. Just money's just stuck in this little controlled pocket. Whereas Bitcoin's still putting out blocks, still working. There's always drama around it, but it's still working. And I think that people forget about that. And I would say that as far as this whole kind of corporate centralization thing, none of that impedes Bitcoin from working. It's not even at the current time raising fees. I mean, that one of the concerns, obviously, when 10x more people want to use Bitcoin, there could be fee pressure on the main chain, which could elevate smaller users to higher layers of the network, which has trade-offs. But at the current time, you have kind of the perfect world, which is that there are these big pools of capital buying it, and yet it's a permissionless network. Anyone's free to use it. I would like to see more people, directly use it. I would like to see more retail buyers buy it and take self-custody of it. I invest in businesses that try to make that possible and encourage it. So I always like to see more of that. But Bitcoin works. And I mean, if people are concerned around MicroStrategy buying or BlackRock buying or governments buying, basically what they're saying is that the weakness of Bitcoin from large entities, like the way that they want to kill Bitcoin is to buy it. Like if that's Bitcoin's weakness, if large entities buy it and that hurts it, then it was never meant to be.
Yeah.
I look at metrics like because it's proof of work, not proof of stake. I'm somewhat less concerned around ownership concentration. It still affects price potentially, but I'm more concerned around market functioning. So I look at things like miner centralization, miner supply chain centralization, mining pool centralization, um, things like that. Um, node distribution, stuff like that. Less around the custody aspect. And in addition, so a lot of people are also concerned around stable coins eating into Bitcoin's market share for payments. Which one, it's not taxable for the most part, so entities gravitate toward that. And also for people that are using it as like working capital, so savings for like 3 months that you're going to send around and receive payments, people, a lot of times, especially in emerging markets, people spend in a month what they made in that month. They can't risk a 10 or 20 or 40% drawdown, which Bitcoin can do sometimes. So they have like these working balances. But part of Bitcoin reaching that level is when more and more entities own it, and it's 5 times larger than it is now. And you can't have like a single like FTX in the Bahamas blow up and then send the price around, affecting everyone's money. So part of the maturation process is that more entities buy it. That'll include small entities, big entities, potentially sovereign entities. Pretty much the whole stack is buying it. If it ends up being a global reserve asset and a global reserve money, it basically means everybody's going to own it in some way or another. Now, the path dependence still matters. The ideal, optimal, the utopian scenario is all the little people get in first, then the bigger people come in, and like nation states are last, right? You don't want like Apple to come out and buy, and become the biggest Bitcoin holder after they've already kind of played the fiat game really well for 3 decades, right? But um, as a permissionless network, you can always choose who figures it out earlier. That's why a lot of us engage in education. I mean, most people here are they have platforms or they individually work with people to help people learn about Bitcoin, self custody Bitcoin, just relentless education to try to get out there and say, hey, before companies come in and just bid up the price to multiple six figures, try to learn about it and buy some. Um, so I think people can keep doing their part for education. Um, and everyone has their kind of like there's different things you can do, like you can educate, you can invest in companies that make it easier to self custody, um, all sorts of things you can do, but basically everything I'm seeing now is still good for Bitcoin, and I'm bullish because it continues to work.
MicroStrategy's Bitcoin holdings have gone through a meteoric rise in value, reaching levels in the multi-billion-dollar range. This has completely changed the way corporations normally handle their money. Since the beginning of the year, MicroStrategy has done better than most investors by getting a 13.7% return on its Bitcoin position, while many hedge funds are having trouble. When it comes to paying for ongoing Bitcoin purchases, the company is aggressively growing, doubling its capital raise goals and selling expensive stocks as its main way to get money. When this strategy is used, high stock prices are turned into a perpetual engine for buying more Bitcoin. Critics say that the company is taking money away from shareholders by offering stock every 3 months instead of once every year as planned, like a Ponzi scheme. This is especially true now that the plan happens every 3 months. The vision is being led by macro strategist Lyn Alden, who is not bothered by what is happening. In order to get what she thinks is real and unchangeable value, she is taking advantage of Wall Street's fixation on fiat benchmarks. MicroStrategy is not only investing, but it is also going against the grain in the financial world by announcing the start of a Bitcoin-based corporate standard. The competition to be the most popular cryptocurrency in the business world is getting tougher for Bitcoin Spot.
Sure. So as I outlined before, I would be concerned if their debt levels got relatively high. It's hard to measure exactly how high too high is, but generally speaking, the more debt there is relative to their equity and their Bitcoin, the more of a chance that they could run into a bear market problem. Now they are terming that out pretty significantly. So they're doing calculations to basically say that Bitcoin would have to be in more than a 4-year bear market for them to run into serious trouble, where they'd either have potentially trouble refinancing their debt, or having to sell Bitcoin in order to meet their obligations. But that is one of the negative scenarios that could happen is if they get over leveraged, and Bitcoin enters a longer than normal bear market. Um, Other potential tail risks are hack risk. As far as I know, they diversify their custodians. I haven't kept up on all of their filings, so I don't know if that changed, or if they moved that around. But I know historically they had 3 different custodians that they used. So forgive me if I'm not super up to date on what they're doing with that. And also tail risk of, it's a giant honeypot. If the U.S. government has a problem, they know where the Bitcoin is. Same thing for BlackRock. So Bitcoin IOUs are not the same as Bitcoin. So I think that I think they're doing the right strategy for them. Um, and I understand concerns that people have around concentration. But It's an open protocol. They're buying a lot. They said they're going to buy a lot. They are buying a lot. Others have had 16 years to stack. Um, they still should be stacking other people. So I always like to see more diversified Bitcoin holdings wherever possible. But basically, I would say the most reasonable risk is just debt terms relative to the market cycle, which so far they've navigated, but you know, it's always a risk.
So
Nothing,
MicroStrategy on a
nothing
risk
of that
adjusted
scale. I
basis.
mean, sometimes if you go down to penny stocks, you can find something that went from 1 penny to,
Yeah,
but other anything of scale and liquidity that actually like funds can buy at scale, nothing's
yeah.
reached it. I would point out that GBTC had more Bitcoin at their peak than MicroStrategy has now.
Ooh.
So MicroStrategy has 500,000 and change, whatever the number is. Grayscale had comfortably over 600,000 at their peak before the ETF conversions allowed all the Bitcoin to drain and go to cheaper ETFs and places like that. Um, and then if you go back really far, I mean, places like Mt. Gox, the percentage that were like trading on one exchange in the early days. So I would say people that are concerned here in 2025, I mean, if they weren't equally concerned in say early 2021, late 2020, just keep that in mind that there are these pockets of centralization that happened. Potentially a bigger issue is just how many coins are sitting at Coinbase because a lot of these entities all like use Coinbase for some or all of their of their custody. So you've I think like a couple million coins at Coinbase. Um, that's potentially a bigger issue. Ideally, you want ETFs to hold it at different custodians, like Fidelity's doing. They're holding their own coins rather than all just being like an overlay on top of Coinbase. I would like to see more diversification there. So I do think that there are valid concerns around centralization, but this is by no means as centralized as Bitcoin has been, and in many ways far from it. So I actually like the call. So I'm going to disagree with at least most of the negative takes. Happy shareholder since August 2020 when they announced the Bitcoin plan. Um, so the funny thing is I didn't love the initial 21 plan um, because I didn't like the even equity and debt proposition. That, in my view, was more debt than I would have preferred, should they have issued it all. But I also pointed out in a tweet at the time that that's just an estimate because they can only issue as long as there's demand for it, especially the equity. And that's very easy to measure. If the premium's over NAV by a comfortable margin, it makes every sense in the world for them to issue more shares and buy more Bitcoin with it. And then the preferred, that's more of a complicated thing to measure, but basically bond market demand for it. And so when I went long MicroStrategy back when they made strategy, first they were buying Bitcoin, then they were issuing debt to buy Bitcoin. I was like, okay. Then when they were issuing like third and like second and third rounds to buy Bitcoin, I was like, is this getting a little bit much, maybe? But then when they started issuing equity to buy more Bitcoin, I was like, okay, that's actually de-risking it. That's improving like the asset stack compared to the debt levels at the cost of share dilution, but that makes sense as long as the premium to NAV is high. And so it is true in that one tweet that they have issued that they've not issued as much debt as they said they were planning to. They've issued more equity, and now they're talking about issuing more. I think they're going to continue to be equity heavy, which I understand that some shareholders don't like. I actually prefer that because I view that as the more conservative strategy. The only thing that would ever really concern me about their strategy if they have too much debt, that opens them up to say a 5-year window where Bitcoin performs poorly and then they enter some sort of liquidation cycle or troubled refinancing cycle, which is still, I think they're terming that out pretty well. But I always err on the side of caution, so I tend to like the equity focused approach. And also, I would say that buyers have to be cautious. They have to be responsible because back when MicroStrategy was trading at 3.5 times NAV, everybody on Twitter was saying it can go higher and higher, it can go to 10 times NAV. Why not go to the moon, right? And people were buying into that. So no wonder that some of them are going to be sensitive to share dilution because they bought at a price that is not conservative. There's no official range for what it can reach, but you're taking on a lot of risk when you're buying it 3 or 3.5 times NAV. So far, what I've done with MicroStrategy is that, for the most part, I hold Bitcoin. In certain brokerage accounts, I'll hold MicroStrategy. And whenever it hits like 3 times NAV, I actually trim part of my position out. So I've actually removed a big chunk of my, like more than my cost basis. Everything I'm playing with now is like house money. And I plan to keep letting it run. And if it ever enters these periods of euphoria, I tend to take a little bit of chips off the table. Whereas if it ever kind of comes back down, sometimes I add a little bit more. And I think that's an approach worth considering, or at least whenever it's at a high premium, just manage expectations. They're going to dilute you every time the premium's super high. The market is basically screaming for them to issue more equity and buy more Bitcoin with it.
This isn't just about dilution of stock. It's a bold challenge to fiat-based accounting itself. The message is that the traditional financial system as we know it will end when chief financial officers start measuring company funds in satoshis instead of dollars. MicroStrategy could control up to 10% of all Bitcoin by 2030 if they keep going at the rate they are now. This would make them a private Bitcoin reserve bank with more economic power than many countries with gold reserves. This isn't business strategy anymore, it's a fight for control over money. Lyn Alden says that MicroStrategy's goal isn't just to make money, it's to show that Bitcoin could become a new global reserve currency. Every Bitcoin they buy is a building block for a new financial system. The SEC is already being forced to regulate something that is basically a Bitcoin-backed financial instrument. This shows how upsetting this move is. Saylor isn't just buying Bitcoin, he's also using the current fiat system to show how flawed it is, which is a clever way to beat central banks at their own game. With more people wanting privacy and decentralization, Bitcoin is becoming more and more popular. This strategy isn't just working. It's making everyone face the fact that traditional finance is falling apart. The real question isn't whether MicroStrategy's plan makes sense, it's whether the old financial system can handle what it means.